personally, for me, one of the misconceptions and potential loopholes for those in the ESG space is to stop at the ESG level, because ultimately there's various ESG issues that make up ESG. And climate, if you shoehorn climate as an environmental issue only, that's wrong, because climate is a social issue. It's also a governance issue. The same with nature. It's not simply an environmental issue. It's also a social and governance issue. But in terms of a spreadsheet, in terms of a document, it's easier to say E, S, or G. It's easier to comprehend. But in reality, they are more interconnected than what they are. So we've tried to understand. So I can be honest with you. I've spoken with some of the global players before, Allianz, AXA, Swiss Re, Munich Re. I engaged with them before. They didn't have an ESG strategy. So they had to start somewhere. So, but that was some 10 years ago or so. And so many of the folks who are driving the ESG agenda, but it's not only them. You have ARC here in Africa, who's an ESG leader, right? So the question for us is that how could we democratize that agenda? So we created an ESG guide for non-life insurance. So if you are an African insurer or Middle East insurer, where do you start? If you are a PNC writer, then this is the first port of call. You can look at this, and that is 2020. We create the first ESG guide for non-life insurance. If you're wondering about life and health, there is also a guide for ESG and life and health underwriting. And we all know, for those who are composite insurers, that life and health and PNC are very different branches of business. So if in this life and health guide, it's in the context of underwriting risk of mortality, morbidity, longevity, and hospitalization. So if you're wondering how to integrate ESG and life and health underwriting, look at this guide. And then we're gonna go deeper. Next week we'll be in London. We'll be launching a big paper on how life and health insurers can really drive a more preventative healthcare model globally that could also help close the health insurance protection gap. And there's something we're exploring: what's the role of a life and health underwriting book on net zero, etc. And ultimately, on this agenda of ESG, how can we steer insurance underwriting portfolios towards positive outcomes in the context of the Sustainable Development Goals? So how will ultimately underwriting books of business contribute to poverty reduction, climate action, etc.? And I think we've heard examples along the way. But ESG and this SDG makes it a very holistic sense that it's fine to have examples, but ultimately the power will be portfolio-wide steering of underwriting book towards these big challenges. And we're trying to do that in the PSI through different things and different initiatives. And we're also learning from the regions, obviously including Africa, Latin America, and Asia, on what we can do on this agenda. So without further ado, let's start with our panel. We have Ange Chitate, the COO of ARC. I'm so happy to see you again. After 4 years, 2019 at the PSI event in Munich, hosted by Allianz. It's great to see you again. We have Mia, longtime supporter of the PSI from Cenfri in South Africa. So dedicated to sustainability over the years, and it's great to have her here. And then we have Monday, who asked a question already, CRO from WAICA in Kenya. Is it Kenya? No. Oh, no, sorry. Sierra Leone, yeah. Okay. All right, good. Let's start with Ange. Yeah, give you your ARC. ARC is it's a very unique entity. It has an AU mandate, but one of the badges is that you're the #1 according to, is it MSCI? Sustainalytics, you are the #1 rated ESG insurer in the world. Yes. Yeah. How did that happen?
Yeah, good question, Butch. Yeah. So firstly, ARC didn't have a strategy. We had no strategy. And we're honest that we didn't know what ESG best practice should look like. So we thought, let's first get checked by the experts, the agent that came through to assess us. That's the only way we can then look and see where the gaps are in our exposure and then build from that. So it was a traumatizing process. I think it was a 6-month process. The first year we were assessed. And I think for us, it was very telling of how far we are with ESG best practice. But at the same time, it was helpful in terms of where we need to get to, right? So basically throughout the timeline, right, we were checked on basically underwriting policies, HR policies, finance, investment policies, and to see what's our exposure in ESG and what we should change and how we're doing the right things right, if at all. And the outcome was that we were doing a very good job in our investment policies, where we were very clear about the guidelines for investment, right? Asset management, they knew where to invest, it was very clear. Our weakness was more in our policies on procurement, right, and supplier contracting based on ESG practice. So we did not do a good job in assessing our suppliers on how they are aligned to ESG practice, and obviously contract based on that. So that's where we were, I think, we had a gap. And then also we were very strong on ESG practice in our pricing and premiums, right? Where we knew that our governments who we serve to provide insurance for climate disasters could not afford the premiums that we had to set up. Pricing isn't easy in our space. But we knew that there are sources of funding out there where we can actually help them to get funding to help them pay the premiums. So we went out there to donor partners to engage them on how they can help us with funding for the governments to be able to afford to buy the policies and able to actually pay the premiums. And we had a good response from the USAID, from AFDB, who were in the room, from KfW themselves, from the British government, and we have a funding that is in place for governments who can afford to pay the premiums. And that became our key, I think, our key strength, in that with our the pricing, with the premium, we actually are having a solution to actually mitigate, the gaps from caused by high pricing. And then the other area where we came out strong was in our diversity, in our team, where we showed that our team is diversified, skills diversified, culture, gender, and we have equity. And we had to show and prove that our remuneration, our development approach was applied with equity best practice. So it was a journey where we were really checked and tested, which in every single aspect of our model, such that when we were done, we thought, oh my goodness me, we have failed dismally. But when we saw the results and how we were exposed and how we managed the exposure, we were pleased to see that by virtue of our business in the environment space and in climate disasters, we managed to check other areas which would affect our ESG best practice view. So that's pretty much where we were in as ARC in that, yeah.
Thank you so much. So I think one key takeaway already is that to be the #1 rated company, at least in the context of Sustainalytics, you need to look at the entire business model on ESG, total balance sheet approach, because you're looking at assets and underwriting, but you also look into procurement, and you also look into incentives and the culture on ESG within the entity, right? Great. Let's go to WAICA. And Monday, how's the ESG journey for your company so far? Where are you in your journey?
All right, thank you so much, Butch, and thank you for having me. First and foremost, let me say this: WAICA Ray was set up by insurance companies in 5 Anglophone-speaking countries. So that means we have companies from Nigeria, Ghana, Gambia, Liberia, and Sierra Leone that set up WAICA Reinsurance. So that means we have this diversity within the group. Okay, so and we operate in about 7 African countries currently. So when it came to the issue of ESG, we will say that we actually started that consolidation of our ESG framework in 2022. I mean, it's very recent. So that means some companies here will also learn from our learning curve, what we have done in the past 1 year or past 2 years in aggregate, okay? Some of the challenges and some of the wins we've also had. Now, in setting up our ESG framework, it was a decision of the board. You know, some of this program, when it actually had to do with risk management or ESG program, the tone always starts from the board. So if the board is not involved in any of this activity, it will not be a success. So in doing that, okay, the board committee of the risk management committee was tasked with that oversight responsibility for ESG. And so management was able to create the sustainability team. Okay, so first of all was for us to create the governance structure that will drive the ESG program. So I would say so far, okay, we've been able to join the Nairobi Declaration as a signatory. We've joined the United Nations Principles for Responsible Investment. We are also signatories to the UNEP FI, which is the PSI arm. Okay, so it took that step for us to understand how we should integrate ESG into our program. And one of the very first assessment that we did was to do a materiality assessment. Okay, which of these ESG components will be priority to WAICA as a group because we operate in different African countries. And when we did that materiality assessment with the internal stakeholders, now naturally I, as the risk manager, I had my own perception that, oh, this particular component, maybe climate risk or climate physical risk or climate transition risk will just come out as number 1, number 2 of our ESG priorities. But when we did that materiality assessment with the internal stakeholders, the survey outcome was totally different from our own perception. And that was an eye-opener for me, that when you are implementing your ESG program, you should get your internal stakeholders involved in the process. Otherwise, you might be pursuing your own agenda and not the entity's agenda. So when we did that, okay, it was interesting to find bribery and corruption among the top 5, to find business ethics there, to find climate physical risk among those components, and to also find human capital development among the top 5 components of our ESG framework. So we also aligned, or we are aligning our activities also with the SDGs. So when we subjected our operations to the various SDGs, the activities we are doing, our corporate social responsibility, we also discovered that we definitely do not play significantly in all the 17 SDGs. There are just a few of them that we are very strong. Okay, so our focus when we are embedding or integrating ESG into our framework, whether it is the risk management framework or the investment framework or the underwriting framework, is to look at it from the components of our materiality assessment, the top 5 components of that assessment, and also to look at those activities with respect to the significant SDGs that we can implement in order to drive our ESG program. And last year, we were able to produce our first sustainability report, and at the end of this first quarter, we actually also presented ourselves to SRP rating, ESG rating. So all these are being done, okay, so that in our roadmap, which we've crafted for the short term, medium term, and the long term, we should be able to see the gap assessment, both from an external perspective and both from our clients who have access to our sustainability report. And if we have all the stakeholders, both the external assessors, we have the external clients and the internal stakeholders, okay, zeroing in on our ESG program, then we should be able to have that sense of accountability and responsibility to keep working on our ESG program to ensure that by 2030, that our activities from the different arms, because reinsurance is the triangle as asset owners, as risk carriers, and risk managers, so that these three this tripod are properly aligned with the global ESG framework. So that is what I would say for now. Thank you.
Ange, I think WAICA is after your #1 spot. I think Monday you can write the next version of the ESG guide, because you just summarize in 5 minutes the core elements of that. You need to have a mandate from the top. You need to have your governance in place. You need to determine your ESG risk appetite within your company, and so on and so forth. I'm really impressed with what you said. I didn't expect that answer, but it's good that I'm happily surprised that you are on that stage of the journey, that you're really embedding it within the organization. So first question, just to clarify, your WAICA, are you a captive reinsurer, or do you also write reinsurance risks beyond WAICA insurance entities?
Okay, the simple answer to that is that we are a global entity. We write risk from Africa and beyond. We write risk from the Middle East, then from Latin America, and from part of Australia. We also set up an office currently in the Dubai to handle the Middle East area. So we cut across the global community.
So my question to you is next stage implementation. So I always envision the life of an underwriter, at least in the insurance front, because this is where we see the gap, because investment has been around for some time on institutional investment and ESG. So on the underwriting side, it's a gap out there. So I always envision the life of an underwriter. A broker comes to your office. Can you write this risk? And we're telling the underwriter right now, beyond classic hazard, exposure, and vulnerability assessment, for example, in PNC, you need to consider ESG stuff, right? So now you need to look at nature, you need to look at net emissions. Where are you? How are your underwriters assimilating all of this? Is it still number one? Have they bought into this, or do they have no choice because the CRO says you need to do this? So where are you when it comes to line underwriters? Where are they in this journey in terms of day-to-day routine underwriting?
Okay, that is a very great question, and I'm just thinking of how to answer that tough question. As I mentioned, okay, ESG is our ESG journey is still at the infancy stage, and part of the discussion we've had here today is about capacity building, and that is not just a challenge that is abstract; it's a challenge that is real. Okay, now we've introduced a new concept into the underwriting guideline that you need to embed ESG into the decision framework of your risk selection. So what we are doing right now is capacity building. Okay, I must say that. Okay, the underwriters we undergo set of training this year. Okay, so they are for the insurance aspect in underwriters themselves. They have to go through this capacity building so that they understand how the risk decisions are made when it comes to ESG decision making. Now, one of the things that we've done in that regard is that we've also designed ESG questionnaires, both for our financial partners, the banks that we deal with, okay, and we've also designed an ESG questionnaire for the insurance company. They have not been administered yet. They are still in the beta phase, okay, we are still testing them. So, but this will enable risk selection. So when our counterparties, when we enter into contractual relationship with them, the idea is that completing this ESG questionnaire will enable to assess your ESG program. I think that's one of the principles of the PSI, so that our clients, when we onboard our clients, we also understand, we are also able to collaborate with them on their ESG programs. So I would say for now, we are at the infancy stage. We are doing capacity building and also developing toolkits that will enable us to do proper assessment of risk that we onboard into our portfolio. That's what I would say for now. Thank you.
Thank you, Monday, for those answers. And I think even though you're at your infancy stage, I can tell you, you are pushing the right buttons. I think, based on what I'm hearing from you, I think it's great that we can see this real integration happening as we speak today. Let's go to Mia, who's with Cenfri, the Center for Financial Regulation and Inclusion in South Africa, and who's been on this agenda for some time. Mia, what's the Cenfri view on this? Where is ESG uptake in Africa and the Middle East?
Thanks so much, Butch. I think the reality is that there's a lot of curiosity, but I think a lot of people are still at the exploring ESG, what is it stage. And I think the number of people that have signed up to the Nairobi Declaration is a testament to that, because the goal of the Nairobi Declaration is really to make it easier for people to lower that mystery barrier of what is this, how do I tackle it, and then to help people ultimately be able to implement these kind of things in their companies, as both of my colleagues on my left and right have managed to do. So I think the level of underwriting capacity on the continent, as well as the level of board engagement with ESG, is probably two things that is important to focus on. Because as you said, it starts with leadership. It's fantastic that your board set you that mandate. In many countries on the continent and in many boards, that's not the focus. The focus is claims and profit margins and those kind of things. So I think at the board level, it's really critical for these kind of things to be accepted and understood. And then I think the conversation we had earlier today around underwriting capacity and the need to professionalize the non-life side of underwriting is really important. It's a hugely complex space, and how to price and how to think about these complex risks in underwriting, given the extent to which data and models are really still evolving, I think is a high barrier for people to be able to comfortably adopt ESG, because the insurance industry is highly competitive. There's often a bit of a race to the bottom, largely around car insurance in the non-life space. So insurers don't really want to explore things that they can't, that they're worried they might not be able to manage or get their head around or be able to do well. They definitely don't want to disclose to their investors or their regulator that they don't know. So, you know, I think what's critical is to lower the bar for what can be done in ESG. And I think we also need to recognize what is already happening on the continent, because I think we are incredibly innovative on the inclusion side of how to better reach people. And I think the UNEP FI agenda is often dominated by climate and nature-related risks, and I think those are absolutely critical. But the opportunity we have with insurance to build better societies, to build more resilient communities, including at the individual level and setting incentives with business and with households on how they manage their risk, is a fundamental contribution that many African insurers already make to the ESG agenda. So yeah, Butch, so I think lots to be done, but also need to recognize what we're already doing. And I also want to just flag the importance of individual leadership. You know, it's not ultimately the whole ecosystem that has to shift. A lot of people in this room and that have attended the past 2 days, it's personal leadership that shifts what we can do. So I think yeah, lots have already been done.
Thank you, Mia, for that brief overview, I think, of what is the reality out there, right? You know, it's good to have some of the most motivated and some of the leaders in this room, but the reality is that I think many out there may not have even started the journey or are at the curiosity stage. And we all know that curiosity killed the cat, right? My question to you is, there's a reason for R in Cenfri, right? So should we have a regulatory nudge on ESG or not?
I think a regulatory nudge is fantastic. I think it creates a level playing field, which is often one of the barriers to ESG strategies and reporting. I do think regulators need to be careful about what's required up front. So I think if the burden is too high, the unintended consequences are that there is tick mark compliance and that you don't really grapple with the complexity and the difficulty of what's needed to truly create effective, sustainable ESG strategies. So I think regulatory nudges and regulators exploring this issue with the market is wonderful. I think regulators can also help push for a broader ecosystem players to participate, such as brokers, reinsurers, distribution partners, fintechs, etc. So I think a regulatory nudge and collaboration, I think is absolutely helpful to drive this agenda forward.
Is regulatory thinking on ESG lagging market practice on ESG?
I think it's very different between different countries.
Right.
So I do think that in areas of technology, it's often difficult for regulators to catch up
Right.
to where the market is. But I'm definitely aware of a lot of regulators that are absolute thought leaders on ESG. I think the reality is also the context is important.
Right.
So it's a conversation that regulators have to have with the market, and it's a conversation that's not necessarily part of the current underwriting supervisory efforts of insurance regulators.
Last question, I'm just trying to update myself with the region. Isn't there a forum for regulators like AIO or no?
Yeah, so I think climate and ESG is increasingly present in all the regional forums. So I think there's increasing conversations that regulators can have with each other, and peer learning that can happen between regulators. But again, I think it is very important to have that conversation at a country level as well. Peer learning is essential, but a regulator making themselves a little bit vulnerable and saying, I want to learn, let's learn together, I think that's really powerful in a market.
Ange, can I go back to you and see what ARC, such as a unique entity with an AU mandate, how can you push ESG thinking further? I mean, you're covering sovereigns, right? So is there an angle there where you actually can push that agenda?
I think for us, it's really being bold about exclusion of clients based on ESG factors. So if governments are not practicing ESG good practice, they would obviously will not take part in the risk pooling product. Because basically we know that with governments we have issues where there's human rights abuse, for example, and we are aware of governments that are not complying with best practice in just those basic things. And also we know that when we approach governments, we can pick up from them, right, where the leadership is not doing the right things. And we pretty just say, we cannot include you in the risk pooling unless this has been put in place.
Great. So ESG is in your criteria for applicants for capacity, right?
Absolutely.
Isn't this your questionnaire Monday? Is that the questionnaire that you're starting to ask your clients as well? Right. Can I extend that further? what about brokers? Because I asked that earlier in the previous session. Are you engaging with brokers? Or at least, I know you're a reinsurer, but I mean, I'm sure the primary insurers within the WAICA group are engaging with intermediaries, right? Where are brokers there on the ESG agenda?
Okay, right now on the ESG agenda, the brokers are in our short-term plan, okay? But in terms of actual engagement with them, that has not been implemented yet, okay? Because most of the work we are doing right now is to consolidate first on the home front, ensure that the internal stakeholders have the necessary training and capacity, so that when the engagement with the brokers happen, okay, at any point in time, that engagement is fruitful, so that no matter who you are having a conversation with in our team, they should be able to give you appropriate responses. Now, part of our program as well is our WAICA Academy that is open to the general public. And one of the programs that we intend to incorporate into that is also ESG training. So when these programs are onboarded in our academy, the brokers are also part of these programs, and they are largely involved in that capacity building. So why we make progress on our ESG roadmap? Definitely, the brokers who are our major partners will also be brought up to par with what we are doing, and to also ensure, since they are more like the gatekeepers between the insurance companies that we provide the risk cover for, and they are also act as the gatekeepers. And it is essential that they are brought to the same understanding of how ESG implementation can benefit the insurance industry as a whole. So what we will be advocating is the benefit that ESG brings to the entire insurance value chain. So that is part of our agenda.
Thank you. Monty, devil's advocate. So if I'm on the broker side, if I'm a broker and if I go to you and you tell me, fill out that ESG questionnaire, as a broker, I just want to place business, right? And I'll get a commission out of the place business. So the more business I place, regardless of where ESG is, the more I'll get brokerage. So if I go to you and you tell me that, I can just go to the next shop and say they don't require any of these ESG requirements. Why would I go to you? So the question is for Mia. How can we avoid leaders on ESG being penalized for being proactive on ESG?
Oh, that's a tough question. And I think it's a common problem in insurance that it's seen as a commodity that you can just trade. The quality of the insurance is not really assessed by the customer. So I think it is around having conversations as communities, and I think in a lot of countries we work in, there is actually demand also from the ultimate client that's emerging, that they want to see that the various suppliers they work with as a client are considering factors of sustainability. A major problem we have is also with trust in insurance across the continent. And I think a clear demonstration that insurers are interested in society is critical to building that trust. I think you're completely right that the conversation has to happen with the person the customer sees, the broker. You know, so the broker, it's important that they're not just selling the cheapest option, but that they're selling something of value, and ultimately something that contributes to the future of the society the client is living in. So I think it's about conversations. It's about capacity building, but I'm always a bit worried about capacity building as a teaching. It's about buy-in. And it's ultimately about value and trust, long-term value and trust. And these are all words that resonate a lot with insurance clients. But if one of the insurers have cracked this, I'd be very curious in the room, because it's incredibly difficult and the space is very competitive.
Yeah, so two things. So one is, 8 minutes. So in the earlier session, we made the case for a nature positive insurance academy. Should we not have an ESG academy for insurance in Africa? And where should that reside?
Oof. So I think that's part of what the NDSI is exploring. Ultimately, what you want is for these things to be institutionalized. You want this kind of training to be available within insurance associations, regional programs, etc. So, I think we're exploring what's needed and what can be built. So I think there's a few institutions that could easily step in to build some of these, and there's already some existing ESG training courses available. But I think the starting point that we want to explore with the Nairobi Declaration is having conversations with people that are in a similar boat to yours. So very much peer learning and peer leadership, so we can understand what's necessary and build to fill the gaps. Definitely. So I think there's a lot of need for more learning and more conversations in that space. And I think the point that was made earlier, that it should not just be a conversation between people in the insurance sector, but that we need to have the conversation across sectors and across probably different spheres, government, civil society, etc., is also critical. So bringing different people together for me is critical to coming up with your overall approach.
Yes, you mentioned some other factors there. Me and I wanted to check with Ange and others on their thinking here. So clients, right? One would, bare minimum, I would hope that the situation is that if you're a client and you're presented two insurers, everything else equal, including price, that being a Nairobi Declaration signatory, a PSI, would be a tiebreaker, minimum. Right? I would hope that that would be the decision of the client, right? But there's a certain direction where you want to be you will be the preferred insurer if you have a strong sustainability culture and narrative and solution set in your portfolio, right? I guess that's the direction to head into. But I guess as a minimum, you want it to be a tiebreaker, that if you have an ESG strategy, that you would expect people to want you to become the tiebreaker, right? Is that true or no? Or they don't even think about it?
Absolutely true, okay, because on that front, okay, we want to be competitive in all aspects, okay. So whether it is relating to technology or capacity or having the necessary underwriting skills, so when you are competitive at that level, you want something that is contributing to the society as well, and that's where your ESG framework is built around. Also giving back to the society and ensuring that you leave a sustainable environment behind, and your operations are also sustainable in every aspect. You don't have a case of human rights violations. Your business ethics or your code of ethics are sound and meet best practices. So when you are very competitive in every other aspect, and then you're also grounded on the ESG component, I'm definitely sure your clients will be tilted towards making you the preferred reinsurers. So that is my take on that.
Okay. Did you want to?
Can I
Okay, sure. I have a question for you, Ange, later, but please weigh in. Yeah.
Okay. So for us, what we saw was that just because of our ESG rating or ranking, reinsurers want to align with us. So they have more interest in working with us beyond their risk appetite sometimes, and they're able to actually they're more patient with us in terms of, our approach with our risk modeling with the business. So they want to hear us more. They want to be aligned with us. So it does help in a way with our partnerships. Yeah.
Good.
Can I make one quick comment that the whole idea of ESG, it shouldn't just be a label, it shouldn't just be a strategy. A client should be able to feel it in how you engage with them. And that's maybe something that it hasn't yet come through in this conversation, but things like simple language, a client feeling that you're going to treat them fairly because that's part of your strategy. This is significant deal breakers in whether people sign up with insurers. So, I think that's a huge competitive advantage you can have. You need to be able to feel somebody's ESG strategy as a client as well, I think.
Great. So I want to check with the floor if there's if any questions from the floor before I ask one big question again that I haven't heard. I actually haven't heard this secret weapon in Africa in any session today. So, any question from the floor?
That's the question.
Okay, so I piqued your interest, right? So the secret weapon is this. If you Google Oxford and Cambridge, just as an example, students and graduates, Google them and then insurance, fossil fuels, and this just came out recently. There's an article that came out that graduates from these prestigious universities will not consider an insurance career if that entity doesn't have a policy on fossil fuels, for example, or ESG. So the secret weapon in Africa, I think, is the African youth. No one has mentioned that today, and Africa has a relatively young population.
Mm-hmm.
Could that be the game changer, where the youth will determine where they're going to be best placed going forward? If you are a company that doesn't have an ESG strategy, you're not going to be even on my wish list. Could that be an angle that we could pursue?
Now I understand why we are keeping that secret question. Now, Africa, with the level of youth awareness, okay, especially with exposure to the Internet of Things, okay, now it will also be a game changer if part of the decision making for the large or teeming youth population also has to do with how the entity has integrated ESG into their framework. So in a way, it may seem for that to be achieved, there must be a strong awareness program. Because if sustainability is not inculcated into the teaching curriculums, they will get out of the colleges and universities without knowing what ESG is, and it will not form part of their selection criteria. So I think the primary focus should be how the curriculum of the African colleges and universities are structured, so that if at the onset you are able to integrate this into every curriculum, and you understand the benefits of nature-based solutions, protecting the ecosystem, and see how they are the beneficiaries of a sustainable environment, then it will be very wise and sound for them to use that as part of their selection criteria. Thank you.
Great. Go ahead, Mia. Can you weigh in on that, and then Ange, and then I'll close?
Well, I can't comment on recruitment at the moment at insurance companies. I'm definitely seeing it in our business. And I think increasingly there's going to be a need for interdisciplinary recruitment as well as at insurers. So if you can be an attractive employer, you're going to be the one that wins the innovation battle. So, I think definitely it's going to be a factor. How quickly or how substantial, I think, is maybe the question.
So our staff members, the bulk of them are all young people, and they've pushed us and challenged us on ESG. So they're the ones with a bigger voice.
Who's this? Sorry again?
Our staff, our
Your
staff.
staff. Okay,
They're all
great.
young. Us oldies are a bit lagging behind, but they're pushing us and saying, what are we doing about ESG? So you're right, the youth are the most powerful, I think, entity at the moment to drive ESG.
Great, and I think, when people learn climate science in school, nature, I think it will be very much ingrained. Patty, you just missed a new initiative in Africa, the ESG Academy, which you will chair. Yeah. Right? So if there's a nature positive academy, there will be an ESG Academy for the insurance industry. Thank you so much.